Good morning, good morning, good morning. Can you guys see me okay? Just let me know in the comments below. You should be able to see me okay. All right, January 14, 2026. I still have to look at the date for that. Still not completely used to the fact that it's a brand new year. But these are the headlines for today. So we're going to go over the headlines. We're going to take a look at some of the tickers that are being affected by the headlines. We're going to take a look at institutional buying and selling and see what's going on in the markets. All right. So thanks and welcome. Thanks for joining me again this morning. Let's get down to it, shall we? So let's start by taking a look at these headlines here. What do I see? Well, I see that Google Apple AI deal marks huge loss for OpenAI. So let's take a look at those two and see what's going on. I just want to turn on my highlighter here so we can mark what has been looked at. All right, so let's take a look at Google and see what's going on. I've been interested in Google recently because I'm looking for an entry. Well, I was looking for an entry in the $280 area, but price came down, fell short of hitting that area, and has just reversed. If you could see right here, reversed to the upside from here. So I was interested in buying here. This is where big institutional buying came in, and I was waiting for price to drop into here so I could join the longs that I knew were being accumulated at the time. That's okay. Instead, it hit a daily area of demand, as you can see right here. This daily demand came into play, and now we are shooting to the upside. So what's the new opportunity? Well, for me, the opportunity was on the weekly time frame. It looks like, if we look at the higher time frames, it looks like they're coming in with major buying that originated down here in the 170s. So typically when we have a chart showing big buying coming in and then they create a big momentum candle, typically what happens is another momentum candle will be created. Okay, and that takes us to our December 30th, 2025 target. Okay, the target that we did last year of 409. So that's why I wanted to participate in this rally based on a demand zone being created on the weekly chart, because that would have taken us right up to that spot. And now that price is making this a new high here, this is not good for this demand zone. Okay, because typically what will happen is they'll retrace price and then take off. They won't retrace price halfway, go higher, and then retrace price all the way down. That typically will not happen. So the fact that they just created an all-time high here does not lend well for this area of demand to be used to go in long, okay? So I'm going to put this one on the side burner for now because it just is not presenting, it's not presenting to me a good spot for me to enter. Do I think price is going to go higher? Yes. I've got targets at 409. I believe that there's very good chance that price is going to continue up there. All right, let's see. U.S. stock futures slip with bank earnings, tariff ruling in focus. Okay, let's take a look at the markets and see what they are doing. They slip. Okay, they always make it seem like it's like a bearish market coming into play, when it's not even close. Okay, we look at the higher time frames and you can see we are still trending to the upside. We have big institutional demand that came in to play here on the weekly time frame. Okay, so this is bullish. All right, demand bullish. Okay, in fact, let's take a look at this daily chart here. No recent demand zones. Maybe here. Maybe here. Okay, I'll be watching this area. So that means if price was to be bearish and continue to be bearish, we'd be coming right into this institutional demand area. Okay, so there's no reason to suspect that, we're going to be entering into any type of bearish market. We could have some pretty bad news, enough to drop price from 69.67 down to 69.17s, right? And the headlines would make the markets look extremely bad. And yet, all we're getting is a retracement into institutional demand, okay? This is why it's so important to be able to locate the institutional buying and selling on the charts, because you could put things into perspective. There's always going to be the need for retracements so that price can drop into institutional buying zones, okay? All right, U.S. tariffs revenue drop 3 billion. Costco. Let's take a look at Costco. I love Costco. I love buying things at Costco, and I love the stock. All right, what do we have here at Costco? Let's take a look at the monthly time frame. This one's an interesting one. So we had two institutional buying zones that came into play recently. Here's one, here's the other, okay? As you can see, one came into play here, it came into play here, it got removed for price to drop into the one below it, and now we're seeing the push to the upside. So what do we do here? Well, it's still very possible that this upper demand area is still holding for reasons that I won't get into, but for reasons that I've explained at the school. Okay, this price action here, right? The way it dropped and came back up. But we'll do this. Okay, as you can see, I'm going to change the template so that the upper line and bottom line are thicker. And the reason why I do this is so that visually I can see that this zone is the one that's in play. Okay? This zone is the one that's in play. It's the one that price is reacting from. All right? We don't have any supply here. If you take a look above price, there's no institutional supply here. So all we're getting is institutional buying coming into play here. So could we get price to start shooting to the upside from here? Yeah, it's possible. We are reacting from a monthly. Look at back here, what price did several times. Okay, react, penetrated through the monthly area of demand, came back and closed within the demand here. Okay, reacted here, closed within, reacted here, reacted here. They were buying. Okay, they were accumulating shares. The big institutions were accumulating shares of Costco. Here, 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 and here before shooting price up. Okay, doubling the money. Doubling your investment in what, 2 years? Imagine that, investing and doubling your money. That's exactly what they did, okay? And so now we're seeing something similar, right? It looks like to me that they're setting up for a big move to the upside. So if that's the case, what we want to do is we want to be able to participate. Now, let me show you what happened back here. Here's where price was reacting from the monthly area, okay? Where they were accumulating. And what happened was they took out one last area of supply here on the weekly time frame. They retraced to the institutional demand that was responsible for removing this area, and take a look at how they shot price up since then. Okay, so the weekly chart played a very crucial role in price continuing to the upside. So I look here and I see we had this demand area coming across here, and with that we have a supply area that has just been recently removed. So we have institutional buying originating from down here. So what I like to do is I like to change the color of that so that it sticks out from the rest of the rectangles or zones that I'm drawing on the chart. And here's an area of interest for me. So I'm going to be watching this chart, because if price was to retrace down here, first of all, I know that big institutional buying has been taking place here. And on this weekly time frame, I can see and validate this area as institutional buying. So if price was to come back down into this area, this would be an area to accumulate, okay? Then we'd have this institutional supply up here, wait for that to be removed, and that would open up the doorway for a move much higher. Okay, so in situations like this, I like to put an alert on my chart like that, and then put a message in there. Let's try it again. Price is retracing to the weekly demand zone. Look for a long entry. Okay, there we go. So that's Costco. I'll keep my eye on that, but I have my alert set so that if price does retrace down to that area, I'll be alerted. And listen, this is going to be a great spot to get in, okay? Because we're located down here on that monthly time frame. That's a great spot to get in if price was to rally up. And there's a very good chance that we get that, especially if you look at the 12-month chart. Look what's happening on the 12-month chart, okay? We have a rally, a base, a rally again, a pause. Does that candle look bullish to you or bearish? Okay. Yeah. Now it's just getting started, right? We're in January, so it's just, you know, we're in the first month of that candle being created, but so far it looks pretty darn bullish to me. And so we could get another move like that coming out of that area. I mean, have you ever walked into a Costco and saw it slow? I haven't. So there's no reason to suspect that this is going to slow down here, okay? All right, let's see. Bank of America fell, Wells Fargo report profit surge. So Wells Fargo, WFC, let's see what their chart looks like. All right, so did I read that wrong? Bank of America, Wells Fargo report profit surge. They reported a profit surge Wednesday morning. Okay, well, no data has come up here, and we're gapping to the downside. That's interesting. One of our students, Marcel, he gave us a target of 96.05 using, oh, why was there a shift here? Look at that. What's going on here? No. Huh. The zones moved. Don't know why. Let's fix that. Marcel gave us an upper target of 96.05. And remember, the way we locate targets here at White Oak University, we're trying to find areas where it's very likely the banks are going to be taking profits on their long positions, okay? Now, here was an area of buying. Price came down, fell short of that area, and then we saw price move to the upside. But what we're looking at, just to give you an idea, is if the banks were buying something here, okay, and they took price from there to here, price back to an institutional buying zone that they created, then essentially what we're doing is we're looking at that buying area, and we're looking at how far and how high were they able to take price up the first time, okay, when they first started accumulating, and we take that same distance and we apply it from the institutional buying zone, okay? That's another reason why it's so important to locate institutional buying zones on the charts, because then you can project how high they're going to take price, okay? Because we look at what they did in the past and we forecast what they're going to do in the future, and you wouldn't believe how accurate. Well, you could believe, because I've shown you many times how accurate our system is. So when we're reaching these areas here, this is an area where you should be careful, okay? Because when we're reaching these areas, this is likely going to be a spot where the banks, the big traders, are going to start taking profits on their long positions, okay? The latest area that they were buying was right here, okay? This is an area where I would want to be buying, okay? You don't want to be buying when we reach higher time frame targets, okay? The banks are going to be looking for reasons to offload their positions, okay? And if they're coming in with really good earnings, this is exactly the type of stuff that they report. Really good earnings. You know, the estimates were here, but their numbers are here. you know, to make it look really, really good. And then everybody comes in and buys. And as everybody comes in and buys, they offload their positions to everybody. All right, this is how this game works. So I would be very careful with buying Wells Fargo at those highs. And we got Bank of America, BAC. And I think I went over this one before. I would not be a buyer until price came down to the $47 area here. But if we look at the higher time frame, they just removed a massive area of supply. This is good. This is telling me in the future they want to take price higher. Oh yeah, yes indeed they do. 100%. But they're just not going to do it now. Look at the average price of Warren Buffett at $25. Big institutional buying here between 24 and 33. What I'd love to see is a drop down here. I'd be a buyer here every day of the week, okay? But bottom line is they just removed the massive area of supply. They are interested in taking price higher. It just may not be right now that they want to do so, okay? And take a look, Wednesday, January 14th, which is today, this morning, earnings numbers look very positive. Green, this is where people are going to be looking to buy, and we're already getting a drop in price. Weekly time frame, I don't see anything really good here. There might be something here, but it's low quality, okay? Low quality buying zone. And I will label it as such so that in the future, when I come across this chart, I'll know not to put my money on something of such low quality, okay? So low quality demand on the monthly time frame between 44 and 47. I wouldn't be a buyer until price got down to those areas, okay? So just be very watchful of that. These good earnings could be used to offload shares. Oil jumps as Iran tensions flare, risking nerve center of the market. Okay, so let's take a look at what oil is doing this morning. So we started to get that rally up that we saw from down here yesterday, but I want to point out to you what we see here on the weekly time frame. You see this big red, yellow box coming across price here? Well, this is where I have located institutional selling that took place, okay, right here. They dropped price from this area, they rallied price, and then they dropped it from here, okay? And now we're coming right back up to here. So headlines could put a spin on oil, making it look bullish. But as price is coming into institutional selling zones, I would not be a buyer of oil because the chances are we're going to see a drop in price there, okay, once it hits that. So I am not trading oil. I'm staying away from oil at this time. Buffett warns AI risks match nuclear weapons. Genie is out of the bottle. Berkshire Hathaway. I've got a position in Berkshire Hathaway. And let's see. No, that's not the one. Oops. Wrong chart. Let's go. BRKB. Here we go. All right, so how's it reacting? Kind of gapping to the downside. That's fine. The chart that I'm focusing on is the weekly chart. We came into contact with weekly demand. I opened up a position. I am in long. I am in profit, and it's looking good so far. Let me take you to the monthly chart. You see what's going on here? We are reacting from a big institutional buying zone right here. Price came down, contacted it, they bought. Price came down, contacted it, they bought. Price came down to that area, they bought. You see the big moves to the upside, the big green candles to the upside, and the slow red ones to the downside. This is what typically happens when they are accumulating, okay? And when price gets back down to here, I suspect we're going to see it happen again. So I am already situated in long, and I am waiting for price to explode to the upside. We have higher targets at 591, and I believe once we reach there, we're probably going to see a drop to the downside, and then they'll start accumulating again. But for me, I'll take my profits at that spot, and then I'll get back in after they drop. So far, so good. Everything's looking good for Berkshire Hathaway stock, okay? U.S. mortgage rates slide to one of the lowest levels since 2022. FNMA. I have not looked at this stock for a very long time. I remember years ago when I first started trading, I was looking at this stock a lot because of this massive, massive move. I mean, you know, you could have bought this thing at $3.20 and went to 84. It's almost like Bitcoin. So let's take a look. It looks like there's some interest coming back into the stock right now. And let me see. Looks like some demand over here. Not the greatest looking, but nonetheless some demand. We could be watching for a move to the upside from that area. Let's look at the weekly time frame. Let's see. We have demand that came in here. More demand, supply. Although this isn't technically a supply area, I'd be watching this area here, okay, as it's acting as institutional selling, as an institutional selling area, okay? It's happened several times here. So I'd be watching for a break of this area, for a good imbalance here, and then retracement to that imbalance to get into a long position from there, okay? Looks like it's pretty good. And my upper targets, let me see. Probably here. $18.24. Yeah, $18.24. I would take profits there. That looks like a good spot. So one to keep on watch, okay? FNMA looks pretty good. All right, so we covered that one. Growing number of options traders see no Fed cuts in 2026. JP Morgan. Let's see what it's been doing since we last looked at it. Nice retracement so far. Remember I was telling you about JP Morgan. We came in, contacted. Why are my zones moving? What is going on? Several times already. It came into institutional demand on the weekly, hit twice, rallied up, didn't go as high as we had forecasted it to go. Now we're seeing a retracement. This is bearish, okay? Again, bearish. This is bearish. Even though we have institutional demand that came into play down here, and price is above the institutional demand right now, okay? Technically, it's bullish because we have demand and price is above it. But with this retracement and the fact that this area of demand has already been contacted twice, if price was to continue going lower, this zone could break easily, okay? All right? And what's happening here on the daily time frame is bearish because institutional demand is being removed. Supply is coming into play. And let me just show you something. Let me do something like this. Here's the big selling area that's coming into play right now. Okay, this is the big selling area here. Okay, so if price was to retrace and hit that selling area, we could see a big drop to help facilitate that move down here. Okay, there's no institutional demand here except for this once tested area. It's been tested already. It's been used. Okay, so every zone has a reason for being created. That's one thing you have to understand about institutional supply and demand. Every zone has a reason for being created. It's to either help accumulate a position, or it was just in the midst of being created. Like so, sometimes demand will be created, price will rally up to it, drop back in, so that they can refill in their orders, and then they shoot price up. And sometimes price rallies, creates demand. Okay, they're putting in orders, but they're not looking to retrace price back into those areas. to continue buying. So they just continue buying and creating momentum candles instead. This area here on the weekly time frame, they created this demand zone so that they could buy it here and here again. Well, they were able to bring price all the way up here. For me, what I'm seeing, this institutional demand zone has already been played out, okay? It's done. It's served its purpose. So if price was to drop back down from these highs, it's unlikely that it's going to test it again and rally back up, okay? We did see some other charts where there was multiple tests. Remember Costco? There's multiple tests. When it's creating those multiple tests, they don't shoot price up this high before retracing to create those multiple tests. When price shoots up this high, typically when it drops back down, it's going to remove that. So this is a weak chart to me, okay? Daily momentum to the downside. That means short-term selling is taking place on JP Morgan stock. And it's retracing down to a medium-term buying zone that's already been used. So technically this chart is under a lot of selling pressure right now, okay? So I would not be touching this one unless it was to take a potential short from that daily area of supply, okay? All right, let's see. Z welcomes, streams a leader shaken by Trump's New World Order. Nothing's changed with NVIDIA, I'm pretty sure, from the last time we checked. It's still within that range, and you heard what I had to say about it yesterday, so there's nothing new to say about it. Okay, let's look at trending tickers. Bitcoin. Everybody's talking about Bitcoin. Everybody's talking about, why do you think everybody's talking about Bitcoin right now? Well, because we saw a big move yesterday. Did you see that big move taking place? Well, this was the move that I've been expecting for quite some time, all right? And again, we here at White Oak Trading University are going to tell you the headlines before the headlines are even printed, okay? I told you that there was going to be an accumulation of Bitcoin down here at these lows, and eventually we would see a move to the upside. I told you that there's a daily area of selling here that nobody else can tell you but me, okay? Here's a big institutional selling area. And I'm telling you that when this institutional selling area gets taken out, we're going to see a very aggressive, sharp move to the 110s, where our next institutional selling area is located. I'm telling you that now before the headlines come out and tell you, ooh, we just broke through 96K. Previous highs. Oh my God, did you see how quickly Bitcoin moved to 110? The headlines will come out and tell you that, all right? But I'm telling you that it's going to happen before it happens, and this is why I've already positioned myself long, okay? Remember the big institutional demand zone here on the monthly time frame that we've been talking about for how long now, okay? Before the holidays. Now we're seeing it play out, okay? My position is in the green right now, and I'll be looking to add to my position. I'm waiting for this to get to all-time highs because from what I'm seeing, this is the setup, okay? Big institutional demand coming into play, and this is going to skyrocket. So this is looking pretty good. And MSTR, everybody's talking about MSTR now. Oh, it's perking up. It's this and that. It's gapping up. It's looking good. Bitcoin's strong. What did I tell you, right? These are the headlines before it actually happens. Didn't I tell you we have a big institutional demand zone here on the monthly time frame? Didn't I tell you what's happening here is the banks are going to accumulate a position down at these lows before this shoots up alongside Bitcoin? Okay, this is not news to anybody here, all right? And let me show you something here on the daily time frame. You know how we look at RSI very differently than how your conventional technical analyst looks at RSI. And take a look at the RSI here, okay? Look what happened when it dipped into the monthly area of demand. It was very weak, okay? It rallied up, contacted institutional supply, and it dropped right here, created another drop and somewhat of a rally. And look at the RSI, weak, and then it dropped again before another rally. And look, RSI was very weak again. Now, let's look at this last time we got a push to the downside. Where was RSI? You see where RSI is? In the green band, okay? And now we're getting the push up, okay? This usually signals a big move is coming, okay? So all those institutions that have been accumulating this stock down here at 160, they know what's coming, okay? Because again, imagine going to the gentleman's club that you're a member of. Special member of the gentleman's club. Not everybody gets access to this. You have to know somebody who knows somebody, and you have to get, a lot of people to put support behind you before you become a member. And some of these members at the gentleman's club are insiders, and they're telling you, oh, you know that stock MSTR? Yeah, strategy, remember that stock? Yeah. We're buying it right now. And you're like, really, man? Have you seen Bitcoin? Bitcoin's looking pretty weak. Are you sure? Because this stock used to be like $450. And right now it's like 160. Are you sure this is not going to go to 50? And the guys are looking at each other with a smirk on their face, and they're like, yeah, we're sure. And if you want to partake, you can. What are you recommending? Well, I can't give you advice, but, what we're doing is we're loading up big time at 160. Why is that? Oh, because we suspect that price is going to go to at least 300 in the near term. What's near term mean? Well, by the summer. So you're talking about doubling your money. Yes, sir, doubling your money. Can you imagine being told by insiders that this stock is going to double before the summer? You're thinking at this point you're going to take all your savings and you're going to buy this stock because you could just double your money in less than 6 months, right? You're pretty damn sure about it because when you're at the gentleman's club talking to these insiders, you know these guys and you know who they are, and you know that they mean business and they don't put money in things without knowing for a fact that something's going to happen. You're pretty damn sure about it, right? And imagine knowing this and then buying it and only telling a couple of friends of yours, but swearing that they'd never speak a word to anybody, having them swear and then you're situated into a position, and then as the weeks and months unfold, you're watching the news and you're listening to the news anchors telling you how MSTR is going up and what a shock. Nobody was expecting this. And you're like thinking to yourself, oh my God, what world have I entered where I'm part of a gentleman's club and I get access to information like this? Where your typical investor is like trying desperately to put his money in investments and hoping to get 10% return a year. And here I am privy to information that allows me to double my money within 6 months. I look at the charts like this because when you're doing institutional supply and demand analysis, I'm getting access to information that nobody has access to, okay? And the reason why I have access to this information is because I've put in the hours over the last, what are we at now? 12 years, almost 13 years now, studying charts and learning about institutional buying and selling. And so now I'm privy to information that other people are not privy to. And I am passing this information to you guys. And the reason why I'm passing on this information to you guys is because I want you to see the information that I'm passing on to you before it plays out. So that you see the information that we have. So that you will be interested in wanting to learn this. Because this is a skill that you can add onto your life and have forever. The markets will not change. The markets have been moving the same way since it began. It's just easier now to read the charts than it was ever. In my opinion, it's easier to read charts now with the tools that we have and the availability of these charts on a laptop anywhere in the world. It's incredible. You could do this anywhere in the world. So simple. And, this last holidays, I showed you, I was trading from my cabin in my cruise ship in the middle of the sea, putting on trades, doing analysis. And it was just incredible. So MSTR, I'm going to be opening up a position soon. Just letting you know, okay? Just letting you know. So this bottom here, really good. Let me see on the 1 hour time frame if there was something down here. This was the bottom here. Yeah, it looks like big institutional demand came in here, right here. down this low. Look at that. As price was right in this area here. Amazing. Amazing. Yeah, that was down the lows here. Yeah, so I'm going to be looking for a position. I'll be discussing the details of this position with members. So yeah, if you want to know exactly where I'm getting in, come and join us here at the school. All right, so that's Bitcoin. That's MSTR, Bank of America. We saw. Okay, CRM we haven't seen yet. Let's take a look at CRM before I let you guys go. Ooh, big drop. Are we surprised? No, we're not. Why? Look at the monthly time frame. What were we reacting to? Big institutional selling. Again, this is what I'm telling you. Imagine if you were interested in buying CRM and you went to the boys club and they said, I wouldn't be a buyer of CRM. Now that we're coming into that major selling area at 263. And you'd be like, why? Well, because we're selling it right now. You only want to buy when we're buying. If we're selling, don't buy. They were selling right here, okay? They dropped price, they rallied back into that supply, and now they're dropping price. And now we're gapping down. So the news can say whatever they want to say about the reason for it dropping, and we can take a look here. What does it say? Analysts have boosted price targets for Salesforce. Barclays from 330 to 338. Goldman Sachs from 330. Goldman Sachs at 330 and RBC from 250 to 290. So the analysts have boosted price. Okay, they're saying, oh, we expect price to go higher. Okay, as price is coming into an institutional selling area. So do you understand? Imagine you're at the Gentlemen's Club and they're saying, yeah, we're going to be selling CRM. We're taking profits on the positions that we accumulated from lower. Or we see something that's going to come out that's going to disrupt this industry or disrupt this business, and the stock is not going to do well. So we're going to be offloading the shares that we've got of this company in around the 260, 270 area. You know, the next logical question it would be, how are you going to do that? Because for you to offload your shares, you need to find buyers, right? And they say, oh, don't you worry. You watch the news and you'll see. And then, you know, then you come to the news and you see analysts have boosted price targets for Salesforce. Barclays from 330 to 338. So they said it's going to go higher. Okay. So what do you think retail traders think? Oh, they're boosting it up. It's going to go higher. They buy, right? Goldman Sachs at 330 and RBC from 250 to 290. You would think everybody would be excited and it would push price up, right? And take a look at what's happening with price. Down she goes. Do you know why? Because this is what's required to offload the position. And I know you're thinking, oh, are you telling me that? I'm not telling you anything. I'm telling you to pay attention. When you know where the institutional selling areas are and you know what's required for them to offload positions, just pay attention and see what's going on. This is what I do for a living, all right? So I see these things, and this is why I'm mentioning it to you, because I want you guys to see these things too, okay? If you want to see more of what we have to offer, come and join us at the school. We'd love to have you. Anyways, was the streaming experience good, guys, today? Yeah, I'm in pound Japanese yen trade signal. That's looking pretty good. Stream was good. I didn't get any complaints, so we might have worked out our little kinks. So thanks for sticking around. Of course you guys stick around. Of course you guys stick around. I appreciate all the love and support that you guys give all the time. I really do. And if you want to know more about what we're doing, the trades that we're taking, we got a big portfolio of stocks right now. They're doing very well. We are up overall, and we are in a position on the euro, US dollar. We're in a position on Bitcoin. Soon we're going to be opening up a position on strategy. And I'm just going to give you bits and tips, and I'll offer you some more trade signals this year as well, because I see that you guys are really interested in the trade signals. So I'll continue doing these morning sessions with you guys as long as you will have me. And yeah, I'll leave you with that. Okay, so hopefully this session was enjoyable for you. And if you got something out of it, please let me know in the comments below on the YouTube video. And also hit the like button and subscribe if you're not subscribed, so you can get notifications when we do these sessions in the morning. All right, folks, good stuff. Love you all. Thank you very kindly for joining again, and I will leave you at that. Take care, everybody.